Hi everyone, so welcome to Investing for Value. So today I've got our stock on demand and this is Hasbro. HAS is its ticker symbol. So its current share price is $89.97, giving a valuation of $12.31 billion. So this is one of the world's largest, if not the largest, toy maker in the world, depending on what metrics you're going for. But in terms of units, these guys make the most units of toys. So currently, they have brands like Magic the Gathering, Transformers, Nerf, Monopoly, Play-Doh, Play School, and basically all the Disney toys that you see around. And also they acquired Entertainment One for about $3.8 billion, giving them extra brands like Peppa Pig and PJ Masks. It's quite a wise acquisition because as kids kind of start growing up in this really digital world, um, these two like brands are like they do shows, they do toys, and it's really good engagements with like kids. Because you imagine like kids growing up watching TV shows and playing games all the time. They're not really taking much interest into the physical things. They still are, but it starts to reduce quite a bit. Like, I mean, Play-Doh's still awesome with kids, and also Nerf, but you know, like kids playing outside these days is probably getting less and less. And Monopoly, I think it still does really well because it's like kind of like a family bonding game where families get close with their kids and you know it works out well. Transformers TV show just does well, the movies do well, so it continues to build strength on strength. Um, and that's the kind of thing. So like this is quite a large company. It's got a lot of strong brands. My problem with the company isn't that it's like that it's got all these large brands. The thing is, it's really established. So when you're really established, the problem is the problem is like you're good at what you do, but can you get better? You know, like so that's the thing. So like we'll go through numbers, and then I'm just gonna let you know what my thoughts are. But of course you're gonna have different thoughts. So like, how's the revenues? Well, the revenues from like 2015 they were ticking upwards quite well from like 4% up from prior year, then 13% to the 5 billion when they crossed that mark, and then they managed to keep going with that 5 billion to 5.21. But in 2018, they just like plummeted by like 12%. And then last year, they managed to boost that back up to 3%. So you can see like that large drop, they haven't really recovered as much from that yet. But you know, like things do look a bit nicer on the net profit side in terms of last year when it jumped from the 220. Um, and then that was prior to that. You know, you can see this trend here, like 452, then 551, but then it starts dropping to 397, 202, you know, like 220, and then to the 520. So like, in that sense of things, you know, like things kind of seem a little inconsistent. Which don't actually bother, you know, like it doesn't give you like a lot of like you know, like trust or reliability in the data in terms of like the financial performance. The good things you want to rely on is consistency, right? So like you want to invest in a company that's constantly increasing sales, constantly increasing net profits. So what's the big problem? This is probably the problem here. Like if you look at the franchise brands, which are all the brands they own, including these, but this one just got acquired like last month, so like we're not going to judge this one. This one could be the game changer for Hasbro, so we will have to wait and see what this one's like. But in terms of their franchise brands, it dropped 1%. So like I'm not too worried if it drops 1%, but I'm worried that it's not growing. Particularly if inflation is counting, you know, like the prices probably went up, but you probably sold a lot less units. And then we look at partner brands. which is like something with Disney. That was up 24%. So like they credit this to like Frozen 2, the movie coming out, and then they can sell a lot of merchandise that way. And then I got Marvel, Spider-Man, and that all contributed to like really strong kind of revenues. But then we've got Hasbro Gaming, which dropped 10%. And then we got the emerging brands that was up 5%. So the emerging brands, like it's not as large as the rest in terms of contribution to revenue. So emerging brands is like Play School and Power Rangers, whereas Hasbro Gaming is like Magic, and Dungeons and Dragons. Um, so you kind of get where like all the revenues are coming from. So my worry is that they've got too many brands. They're not focusing on like their core brands, and like they could be doing a bit more in terms of like trying to build out those brands rather than just like trying to just throw everything out the door and then just seeing what works. But of course, you can clearly see like um, the partner brands is really what's been the game changer in terms of lifting the revenues. So like the revenues was up like about 150 million, but you can clearly see that the partner brands was up by about 250 million. So like you can see like with these drops, it's that these are the big impacts here, and you got to go. Well, is there new products coming in that could well change these things? Or if one comes up, does the other go down? Because at the end of the day, like if you're a big player and kids are basically choosing this toy over this toy, like if I want Transformers but I don't want Nerf, or if I want Nerf, I don't want Play-Doh. If I want Play-Doh, I don't want Play School. Or if I want Disney products, I don't want these products. And are they basically cannibalizing each other? So that's the big question. Like, are these brands cannibalizing each other? And is this one targeting the preschool kids? Is that going to be the savior of this company? So that's kind of like the things that we're really considering. And this year, like 2020, we're also looking at still tariffs on their products, though they're looking to um, cut their reliance. Because currently, 2/3 of the manufactured toys come from China, and 85% of the toys sold in the US come from China. So that's a large percentage, and with the trade war going on, there's a lot of tariffs, and which basically ultimately like reduces their profits by quite a large margin. So the fact that they were able to make 520 million, that's actually quite impressive in a sense. Um, so then we look at the coronavirus, which has had quite an impact on quite a few companies. Usually quarter one isn't that strong for Hasbro, so they're not too worried right now. But they will start getting a bit more worried. Like usually most companies right now are giving it a 2 month period. And if it prolongs more than 2 months, companies are kind of starting to predict that things are going to be quite heavily impacted. Though if things kind of like pan out in the next 1 or 2 months, then it's not too bad for this company. Though if things last a bit too long, then they do foresee like quite heavy material impacts. And also, like, in terms of the tariff situation, they think by the end of 2020, 50% of the products that they outsource in terms of manufacturing will be in China, whereas the other 50% will be somewhere else, which will be, quite good considering that it's sourcing most of the manufacturing from China, and there's been a lot of tariffs. So, like, things have not been as, like, clear sailing for this company. Do I recommend to buy or not? Like, in my view, like I kind of think this is not a bad price. Though, like if you're looking at the one of the high net profits that they've produced in a long time, um, you're still paying, you know, well into the 20s of the PEs. So you're definitely paying quite a high premium for a company that hasn't produced really strong net profits, and doesn't seem to have really strong growth coming in. Like the growth has been very inconsistent. So like you want to buy companies that have really strong and consistent growth. Like they've got lovely brands. Like this is like a, you know, a kid's dream. If you owned all these brands, um, that's lovely. Like those are amazing toys. Though we've got to take the emotion out of it, and we really just have to look at the numbers, and we've got to go, are things going to come through? You know, most people kind of think Baby Yoda might be the savior. Um, though at the end of the day, when you're licensing your, you know, revenue, um, you kind of get lower margins. So your big margins usually come from the products you own. But stuff that you have to license in, you know, you do on a licensing deal, the margins aren't as great. So that's kind of the, you know, the kicker, where, you know, like the margins aren't as great, but you know, but you do sell a lot of it. You sell a lot of it. And the thing is, they're currently selling out of Baby Yoda. And the thing is, can Baby Yoda basically just push this whole company um, to do really well? There's a potential chance, if, you know, like people, like basically kids to grown-ups love Baby Yoda. Um, it's kind of funny how like there's like one thing that usually can be the driving force of these companies, particularly with like Disney Plus being quite a hit, and there's, you know, like Mandalorian being such a successful TV show. It kind of bodes well for Hasbro to continue their partnership, of course. Um, so my thoughts are like this. Like you can't necessarily buy Hasbro at a like, you know, too low of a value. So I'd say like if like I'd say like this pricing's okay. Like I'd say like if you feel like buying some, buy a little bit. Though I'd definitely wait out for like $80. Because it's quite possible in this kind of climate with the tariffs, with the coronavirus. Um, I'd say it's very possible that it gets hit to $80, and then you buy, and you must have the intention to hold for the rest of the year. The good times for this company is actually next year, when the tariffs will basically be reduced because they've put their manufacturing to other countries, and then potentially China and the US have, you know, further their trade deals, and then they've actually reduced these tariffs, and then Hasbro gets more profits after that, and also the coronavirus starts to like get back, you know, like starts to be in control, like you know, the supply chain's back on, things are okay again. So that's the kind of thing you are looking out for, and I think like this year will be the year to be buying. Next year will be the year that you start gaining. So if this is a year to be buying, you want to be buying at a low price, um, so that next year when things do really well, then it goes in your favor. So if you get what I mean. So you kind of like look at this as more like a long-term type of stock, because like at the end of the day, this is a very strong blue chip company. Though, you know, like we can kind of see that things aren't necessarily growing that much. They're bouncing between that $4 to $5 billion mark. Because, you know, at the end of the day, you're a large toy maker. It's very hard to sell more toys because you're kind of saturated a large part of the market. And to just open things up, yes, you can still have opportunities. It's kind of like Entertainment One. They potentially find some new opportunities, and they're going to earn a bit more revenue. And I do like, and that's the thing. Like, the price has fallen quite a bit, and these are all the revenues and the profits made on these. So you've also got this year you've got the contribution of another company. Um, so, that kind of does help it, potentially just minimize the impact of revenue dropping, profits dropping, and it could, potentially be a very good deal if you could get the stock at like 85 or less. Like I think like this price, like at the end of the day, we're probably haggling too much, aren't we? Because the stock did drop from like 120 to currently just below 90. So it's quite a large drop. And the question is this company forever selling at a premium? Or does it come a bit lower? Like if you depends on how much you really want to get in this company. Like I don't think there's a rush to get into this company, but if you feel like there's a lot of good products coming in to lift these other areas of the company's revenues, then sure, like it's not a bad time to be going for it. Though if you're, feeling like you want a bit of more of a margin of safety, which would be what I'd go for, particularly given this isn't the year for buying, but don't expect to be like gaining a lot this year. But I'd say next year you'd be looking at a higher gain. Because I'm not too sure the share price is going to like head up too much higher. Though who knows? Baby Yoda comes out, everyone wants a Baby Yoda, and then it just you know skyrockets on Baby Yoda because everyone's like, oh, Baby Yoda is doing so well, it's so popular, that the whole company, that its share price goes up because they're just so well selling. Though we do need to sort out these supply chain issues. So the minute China comes back online, is when they can start producing more, and they can start getting more products out the door. So you hope it comes in before the end of Q1 because if it goes extended over Q1, it starts impacting the larger revenues because Q1 is generally quite quiet because all the gift giving's been done in the Christmas period. And then when you start the new year, there's not that many eventful things to be giving gifts. So yeah, it's probably good to just see how things pan out for the next 3 months. And then, like no rush to buy. You can always just see and analyze how things go. Likely when they report quarter one is going to be a little bit worse than the prior quarter one. And the stock price might just drop a bit as well. So like that's what I'm seeing. Like there's like quite a few headwinds for this company in the short term, and it might mean there's an opportunity to buy at a lower price. Though be your own judge. Those are my views. Like what are your views? Let me know below. And if you've got other stocks you want me to talk about, just comment below, and I'll be more than interested to look into the companies. Of course, I need to find a bit more time as well, but I'm very enthused to do this. And until then, well, good luck investing, everyone.